final piece of the policy behind investment crowdfunding, remember, number one, more money for startups. Number two, inclusive investing. Number three is inclusive entrepreneurship. The UK is enormous. And in fact, the UK these days, there's more money raised and more deals on investment crowdfunding platforms. And so what we're looking at here is the number of offerings, the number of companies that try to raise money using this method that I just described. As you can see, in the earliest years, very, very few, and this is nationwide. But more recently, it's about 1,500, about 1,500, and it's been pretty steady over the last couple of years. How much money is being raised by these companies? And as you can see, in the earliest years, it was 20 million, 60 million maybe. But in the more recent years, and again, it's been pretty flat since the end of my chart here, roughly $500 million is invested each year into these roughly 1,500 companies over the last couple of years. But as you can see, it's growing. It used to, like 3 years ago, it was 0.5%. 5 years ago, it was 1/8%. So it's growing very, very fast. There's three main policy goals. The second and the third are closely related. The first one is simply that startup companies, small businesses are good for the economy. They grow employment. They move the economy forward. They develop new products and services. It's just good for the economy to get more funding. So here's another way for companies to get funded. The second and third policy goal of this law both relate to inclusivity, but inclusivity in two different directions. So first, remember, for decades, retail investors, people who did not have $1 million to invest, were legally barred from investing in these sorts of early stage startup companies because they don't have registered securities. Sure, these are risky, but people should be allowed to spend their money as they wish, or at least some amount. If you can go buy a $85,000 pickup truck at will, or go to Las Vegas and gamble your money as you wish, surely you should be allowed to invest a couple of $1,000s in speculative startup companies. And so we wanted to give retail investors, we wanted to include them in the class of investors that are allowed to invest in startup companies. And as you can see here, the people have really taken this up. In the early years, quite small, it was pretty obscure, but more recently, roughly 500,000 investors have been investing each year for the last several. Some of these are repeat, but my sense is that there's probably at least 1 million or maybe close to 2 million at this point of individuals who have invested. And we only have 320 million in the country. So the final piece of the policy behind investment crowdfunding, remember, number one, more money for startups. Number two, inclusive investing. Number three is inclusive entrepreneurship. International crowdfunding, comparing the US in blue, the UK in red, New Zealand in green, and Australia in purple. I normalized it using US dollars and on a per capita basis. And as you can see, so the US is pretty small but growing, the blue line. The UK is enormous. And in fact, the UK these days, there's more money raised and more deals on investment crowdfunding platforms than by angel investors in the UK. Comparing some of the key legal or regulatory differences between these jurisdictions. Licensed platforms required everywhere, but the second line down, mandatory disclosure. As I said, the US model for investment crowdfunding is to require mandatory disclosure, but just a little bit. The UK and New Zealand went to the most liberal extreme, the most deregulated, free system that maybe you could have, and there's no mandatory disclosure whatsoever in these countries. Of course, regulation has value, and of course, laws have value, but they also have costs. To file your mandatory disclosure document costs money. To hire a lawyer to figure out the relatively complex regulations costs money. And because these, by rule, you're only allowed to raise a couple of $1 million. It needs to be incredibly efficient and low cost, or it just won't be used. And it actually has been tried. Canada enacted like a really heavy regulatory system 5 years ago. 0.0 people ever tried to raise money using that. So Canada changed it to this more reasonable system.
What does my liquidity look like? Should I expect liquidity, or am I going to be stuck with this company that I just invested in?
So liquidity means you can sell your share. And one of the great things about public companies, like on the New York Stock Exchange, is that they are liquid. If you don't like how Disney is being run, just click, 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 sell your shares. But private companies and startups and the sorts that we're talking here are totally different. If you invest in a startup company or in like a laundromat in the neighborhood, you can't just sell your shares. There's not a ready market out there for it. Securities that you purchase through investment crowdfunding, you may not sell for 1 year. You have to hold them because the number of shares that are issued and the number of securities that are issued by a company is so small that there's not the volume of people that would be interested in trading to have a daily liquid market. That said, a couple of the platforms in New Zealand and here too, maybe in the UK, have set up sort of trading days or trading windows. Like 1 week during a quarter, they say anybody who wants to trade, post up, if you'd want to sell, if you'd want to buy, and they try to kind of match them up.
What's it like in this crowdfunding world, and do we have 3 examples of the best results?
The people that often invest in these companies are what I call brand ambassadors. People that love the product or use the app or whatever it is. They know it and they love it. And so they also invest. Breweries, for example, in New Zealand and elsewhere, breweries do very well. People invest in the brewery. Then when they go to the supermarket, which beer are they going to choose? And what are they going to tell their friends? Oh, this is delicious. So you get this multiplier effect on it. And then so just finally, I'll try to answer your question, which is what are the outcomes? In the UK especially, which has a longer track record, there are dozens of companies that were acquired for huge multiples, or even a couple that have gone public in Australia as well, went on to an IPO.